What's up, ladies and gentlemen? Welcome to today's edition of Dream Firm Spotlight. My name is Tyler S. Clark, co-founder of Dream Firms, where we create generational wealth and impact for entrepreneurial accountants by systemizing how they attract, win, and retain the business of their dream clients. I am clearly under the weather today. My voice normally doesn't sound quite this ridiculous. So I hope you can bear with me as we go through a very important topic given the time of year, which is how to price tax plans profitably. And I want to key in on that part of the year. We have one very important aspect that helps you to sell and get interest in tax plans working to your advantage, and that is the end of the year. And so whenever it flips over into Q4, which obviously was several weeks ago, you want to start to think about, how do I leverage this time of year to be able to get more people interested in what is an incredibly profitable and desirable service to offer, that being tax plans. And what's also very cool about this for the established firms that have some bookkeeping clients, have some monthly clients, what this allows you to do is when you flip that switch, when the quarter changes over, you start to go, let me take a look at all of my clients and which ones have grown relatively significantly from last year to this year, because those are the ones that you want to focus your energies on to promote the idea of buying and accessing a tax plan before the end of the year. And then you get to also express the benefits and say, hey, after January 1st, the only tax plan I can give you is pay your taxes, right? So if they actually want that proactive advice, there's a very hard limit on it, and so you can leverage that to your advantage to increase the interest in the service. But that's not exactly telling you how to price it. It's just a little bit of tidbit on how to get more people interested in it. And here's what I don't want you to do when pricing a tax plan, okay? And I'm going to give you an example from a conversation I had this week on this topic. So I was having a conversation. This person is not a client, and I was walking through and trying to understand how she prices, what she does inside of her firm, and she uses an hourly pricing model for the most part, or she uses hourly to kind of create projects that she'll bill on sort of like a kind of like hybrid model where she gauges the amount of work and then that's how she prices it based on that hourly rate. And the topic of tax planning came up, and I said, how do you price tax plans? And she was very proud, and she said, oh, that's my highest hourly rate. I charge $175 an hour. And it's just a quick precursor here. I don't think you should charge less than $300 per hour for anything, okay? Anything. You ever employ an hourly model. And part of the reason for that is you want to dissuade people from ever purchasing your time. You shouldn't even offer it, but if you do, you want to set the bar very high to be able to access it. And that's the lowest that I recommend that people do. So she thought 175 for what I would say is one of the most premium services, definitely the most premium service that she offered, but one of the most premium services you can offer in your accounting firm. And then I walked through a quick example with her. I said, okay, so, it was actually just something she had done. I said, so you've done this service, you've sold. Yes. What's you've saved someone? She said, Tyler, I saved someone $100,000. And I was like, that's amazing. Congratulations. How many hours did it take you to do that? And she said, it took me about 10 hours. And she could start to tell where the conversation was going. And I said, 10 hours. Okay, so you got paid about $1,700 for something that resulted in $100,000 for your client, correct? She's, yeah. And I go, okay, do you think that was a fair trade? She goes, I think it could have been more fair for me. And I go, I completely agree. Because if you were to tell me right now that I could pay you $2,000 and you could save me $100,000, you could give me a 50x return on my investment, I would immediately give that to you right now. And needless to say, she's like, well, I would not be interested in selling that. I think I'd sell it for a higher price. And that is the crux of why the hourly model for tax plans is so bad, because imagine that she was even more efficient than she was for the 10 hours to do that tax plan. And that's already relatively efficient. But imagine it took her 2 hours. So she would have only made $300 or $500 approximately and saved $100,000 for a client. It just doesn't make sense to deploy that model. So I just wanted to take that one and make it super clear. It's like you can never even mention that you do tax plans hourly, because it doesn't make sense. And even if you use that internally as a way to like ballpark it, you're still going to be way off what you should be getting paid for them, like significantly off the mark. So what's the next option? This is another very common issue. And you can do the same exact math I just did. I was talking to a client we do have, and she said, Tyler, I want to be able to reach $50,000 in new revenue by the end of the quarter. And I was like, you can easily do that through tax plans, right? Like you have easily the client base that can support it. Plus you've got the new leads coming in that would love to buy a service like this given the time of year. So let's talk about the best way to do that. And her initial thought, and I'm going to share what the best way to do it is in a minute. Her initial thought was what a lot of people talk about in the market, which is a flat rate of what they feel is a high price. And so when they say, I can sell something for like 5K or even 2,500, or sometimes it's as high as 10K, it's like, I just want to simplify the sales process to sell something that is a singular price, but the same problem applies, which is if you save someone, let's say it's $200,000 and you get a really nice client, or it's more than that, right? Let's say you can save someone $500,000 or $1 million and you only get paid $5,000. You left a tremendous amount of money on the table. That's not what we want to do. That's not the most profitable way to price tax plans. So we know that we don't want to use fixed pricing. We know we don't want to use hourly variable pricing. So what do we want to do? And this is the final and by far the most efficient option. And really it's a principle that I think I deeply believe and know is the best way to handle agency style services. And agency just means it's better in my hands than it is in yours. And when you have something that is an amorphous project, in other words, there are variables that you need to be able to account for when pricing a tax plan, you want to be able to take those variables into account first before you price it. And you want to charge for the ability to take their situation into consideration to move to the more profitable pricing structure. So here's how this works, okay? It's a two-step sales process. So step number one is a fixed rate to be able to analyze that person's tax basis, their tax situation, everything that you would need to be able to collect data to inform whether or not this person should even qualify for a tax plan. Okay, and so for instance, I would set this price at approximately $2,000. If someone balks at the idea of spending $2,000 to access your expertise to apply to their situation and analyze what's going on and where there are opportunities, they're never going to buy a tax plan in the first place. So this is where you can use that fixed price to be able to filter out people who won't qualify. Now, one point here, okay, this is not the tax plan. I have to separate this, okay? You are not actually doing the tax plan as much as you are doing an analysis of their tax situation to qualify for a tax plan. There's a difference here, okay? You're splitting them out, okay? Once you do that, you will now be able to say, right? You can do the math, you can do the calculations. This is how much you're projected to owe, okay? This is how much I can reasonably project that you are going to save with the strategies, okay? Now, what's great about this, and I know that I'm going to get some people who are going to kind of feel weird about this, but what's great about this is now you can feel like you're properly compensated directly for the level of result that you generate. Now, I'm not going to sit here and say, we're not ERC mills, right? It's not going to be 20% of the money that you save. We're not going to say that. However, you're now able to say, okay, well, depending on the size of the result I can generate, I would feel comfortable being compensated relative to the result. So let's say it's $100,000. I would feel comfortable being compensated for $10,000 approximately, or $20,000, or $30,000, or as high as maybe $50,000. And what's crazy about this is I interviewed one of the most prolific tax strategists, tax planners out there, really the first kind of tax wealth guy, Tom Wheelwright. And when I asked Tom, excuse me, my voice, but I'm not feeling very well. When I asked Tom about how he prices tax plans, this part of the conversation came up because he said, look, I'll do the math, I'll understand the projections, I'll understand the savings. And he said, if I'm saving them $1 million, I have no problem charging them $500,000 because why shouldn't I? And that was an interesting moment for me because I think so often we're as accounting professionals, as tax professionals, we're very nervous about charging a premium price for things that we take for granted, our own expertise, our own knowledge, our own understanding of the tax law. But Tom was like, no problem whatsoever, right? And the reason there's no problem for it is if I'm saving them that much, why shouldn't I be able to benefit in that? And here's the crazy thing about savings is savings, generally speaking, we think on a very small time horizon. So if the client is like, the savings in year one are $1 million and I paid you $500,000, do those savings just disappear in year 2 or year 3 or year 4 or year 5? No, typically speaking, the structures and the strategies you put in place, as long as they're relatively maintained, and you can upsell people to maintenance packages if you'd like, but they are maintained over a long time period. So literally, break out the benefits of the tax plan, even if you charge 50% of the savings, it's only 50% of the savings in year 1, not in year 2, 3, 4, and 5, and 10, assuming they're going to be in business for multiple years. And so when you really start to stretch things out like that, you can see not only how valuable this service is, but how charging an hourly rate, right? Like if I go back to that original example, it's like I charge $2,000 for something that saves $100,000 in year 1 and probably that or more in year 2, 3, 4, and 5. Steal of the lifetime for the client. Of course they bought it at that price. And so it's our responsibility as the owners of our firms to slow down in the tax planning process and say, is this the right type of buyer? Number one, like if they can't afford to buy a $2,000 analysis from an expert in a financial space, they don't have the money they're not going to need a tax plan. So that's number one, it's a filter. Number two, once you have the 2K and you do the analysis, that gives you the ability to price at a level that is higher and still very likely to get accepted by the client. Now, as a general rule of thumb, my belief on pricing is very simple. And I always want the price to value discrepancy to be extremely in the buyer's favor. In other words, the value, the result that they get, is significantly in excess of the price that they pay. So my rule of thumb is 3 to 5x return on an investment and a minimum. So just to keep the math simple, if I do projections and the tax savings are worth $100,000, I would price that tax plan anywhere from $20,000 to $30,000. That's what I would price that at. And then, again, depending on the complexity of the plan and what will be required from a regular ongoing maintenance perspective, I'd either roll that into an increased monthly investment if they're already buying bookkeeping, or I would roll that into something related to a couple $100 a month or a couple $100 per quarter, depending on how much you have to do to be able to maintain the tax plan in the long term. And that gives you a nice bump on your annual recurring revenue, keeps the client relationship fresh. But that's the better to do it. Like bar none, if you look at the other pricing models, you're just leaving a ton of money on the table and it's not worth it. And you also are usually doing a lot of work for clients that won't appreciate or benefit from it at all because they haven't passed the threshold of being able to invest that $2,000. That's how you profitably priced tax plans. So I hope you enjoyed this. I hope you leverage this information to go and crush it in Q4 and beyond. And if you want extra help in being able to get clients who want to buy it, want even more help on your sales process, whatever it is, we'd love to invite you to explore our Create Your Dream Firm program to ultimately see if you're a good fit to work with dream firms. My name is Tyler S. Clark. I hope I feel better very soon for our next Dream Firm Spotlight. Remember, only you can create your dream firm, but we are here to help you every single step of the way. And thank you so much. Have a wonderful rest of your day and go price tax plans much more profitably than you were doing before.